Hi everyone, this is Carlo from Forex. Today is January 11th, 2010, and I'm doing this video for you guys just as part of a training using the pivot step trend line entry system and how to use the trend lines to actually comply with the idea of what we're looking for to do. Pretty quick. If you notice, this is I'm going to introduce you to the technique that I'm showing you to maximize the pips by knowing exactly what we're expecting into the market. Let me just go through the process of explaining to you what's going on. If you notice, we are on an uptrend, right? And I'm expecting the price to bounce inside the zone somewhere in here, and then so it continues to the upside, right? So we have the zone right at 60.28 and 59.76. So right now prices are right here at 60.85. If you notice, I went short the market, and I only went short half the amount of contract because I'm counter trading. I don't want to mess too much with the risk here, but I'm going to show you the technique that I would like to impart it to you so you can understand and learn the process here. Now, I'm not going to use any other indicator because I want you to start learning how to trade by market fluctuation, which I believe is a real way of trading. Once you get this into your bone and brains, you are on the next level of trading. Now, there's a point of view. The blueprint, first of all, the blueprint is the market is overall in an uptrend. Somehow, we are on a safe mode, meaning that nobody will trade. For those who are not too many risk takers, nobody's going to trade once this high is taken or this low is taken. Look, this is how high the market went. All right, so that's a safe mode. Prices never reach above it. That's cool. So you can either go this way down. That's cool as well. Now the other point of view here is this. If you noticed, I have a stop loss right in here, about only 20 pips away. All right, I'm not risking, and that would be 20 pips, right, on a half a lot, on half a lot, meaning that I'm going to be risking only about $100 in here. But what is my potential? Let me show it to you. The potential of this trade right up from where I shorted the market is about 58 all the way to whatever they decided to give me. And the reason that I'm showing you this is because we are on an upturn. We're expecting the market to go into the zone. So it makes sense that if I am expecting the market to start driving itself down, which is a small counter trend downward move into the zone, where this amount of space brings over around 60 pips of potential profits. Since we are anyways expecting the market to do this, why don't we just short the market into it? Well, this is the key for us to be able to do it. This 60 plus 50, let me just put 50 here. It's 50 to 60 pips range that gives us that go or no go. Since the market is hovering over here, notice this. This is another thing that you should notice. This is a gap. Markets usually fill the gaps. And look where the gaps is. It's around this area and pretty close to the beginning of the zone. And if we measured the 60.55 from where we are, we're talking about another 30 pips. Not bad. Not bad. On half a contract, that's $150. So here's the whole point. The idea for us to actually be pulling this up is because, first of all right, let me just see. We have enough space of trajectory into the zone, which we are expecting the market to do it anyways, of more than 50 to 60 pips. That's a criteria. Do we have more than 50 or 60 pips into the zone? Yes. Alrighty, that's cool. Now, the best thing to do is, once you see this happening, how do you access the entry point here? Let me just try to show you. What I'll do, this is a 1 hour chart. I usually then drop down to the 30-minute chart. Look the difference here. Okay, there's more price bar fluctuation going on. And if you drop down even to the 50-minute, then we have further a little bit more price activity. So what I want to show you is, I want to find out this pivot. Let me just mark them. This pivot right here, right? There's another one in here. Obviously, this is a low in here, and this high, and this high over here, and this is another high. So, Carlos, what the hell are you talking about here? I got no idea. So here's the point. These pivot points over here are the ones that I'm looking for, because I want to trace trend lines with it. All right. So we have a trend line in so. Now we got another one in so, like in here. Got it? I think you're starting to get the point. But when the time that I used to do this analysis was right before this, it was up to here. This is all the information that I had when I start watching the market, and look what I found out. I had this pivot low, so I took this low and drove it somehow, just like so. And this was obviously already happening, so I took let's say this one, and this is the one that I'm looking for. This is a mess. Hold on. There you go. Let me just do it as it is. This is exactly what I did. I had that in place, and I also had this possibility as well in place. So this is what I want you to take a look at. Look, trend line tested, trend line tested, got it? Trend line tested, trend line broken, and I went short. Okay? So I used the pivot step system, meaning the market opened here, it made a pivot here, it made a pivot here, and I used the pivot point, which is this lows over here, and I took this one because I don't want a trend line that it's just look like that, although it can be done. Let me just leave it. All right, and well, it could probably be acceptable. So I can leave it like that. So the point is, once I have those bars jumping on top of this ladder or ramp, upward ramp, all of a sudden this bar right here decided to take the other side with a steep move, and it's right there that I decided to go short the market when they violated it. All right, so, and that's where I am right now. Now I used this pivot high, the previous pivot high, so let's say short in here, got it? And I used the stop loss of the most previous pivot high, which is right there, and I gave it away about 5 to 10 more pips, and this is where my stop is right now. So from this point up to this point, I'm risking, let's see how much we're risking here. I'm risking about 23 pips out of a half a lot. That's 100 and what? 115 bucks, something like that. So not bad based on the risk reward that I'm doing. Look, I'm risking 23 pips in order to try to gain 58. That's more than twice of what I'm risking. Now, this is a very highly calculated trade that we can definitely try to take into consideration, but bear in mind, it is a counter trend trade. It is a counter trend trade, meaning that the chances of the actual trade, this trade being able to being pulled out, are quite risky. Now, but since we are on the original trade of our system dictates that I'm waiting for the prices to head towards the synergy zone in order for me to become a buyer. The point that I'm trying to make here that is a little bit risky is because this could take quite some time. It could take a lot of time. It could take a couple of hours to be able to fulfill. Now, the other thing that it could happen, it happens a lot, it is that the market probably could start gyrating and going just like so in an upward steps until they break above and keep going on. That's another thing that it could happen because I've seen it happen over and over again. All right, so far what I'm gonna do right now, I'm gonna pause the video and I'm gonna wait until we reach the 1 o'clock mark and see how the market reacts, because my original plan based on my blueprint of the forecast blueprint is to wait until 1 a.m. around that time to start considering getting into the trades and analyzing my trades. And what I'm expecting the market to do based on my forecast, Forex side effects forecast analysis, is that the market should start driving itself down into a possible buy opportunity into the zone, and then continue its way up, because that's what's the most probable scenario looks like for us in the original forecast for the most aggressive trader today in January 11th of 2010. If you go back into the video of the forecast, which I believe we uploaded it into the training modules as a case study, you will notice that that's exactly what I did. I offered this forecast only strictly for those willing to take the risk of this trade, but I offered the idea of everybody else just to wait until the high, or the in this case, for in this area, the low of this whole movement after the major news report reaction came out. And I need to all of this noise to be clear. We're just waiting for, all of that being cleared, and then come tomorrow with a more clear scenario. But for those thrill seekers, traders, this is the opportunity that I thought it would happen. Wait for the market to enter the zone, then you can go up, and we'll buy around this area. All right, we'll buy around this area, and hopefully they come back down. But in order for us to consider the buy, what we're expecting the market to do, we need for the market to start coming back down. Now, since we're waiting for the market to start coming back down, and we have more than 50 to 60 peeps of movements from this space to the beginning of the zone, we could probably try it ourselves and get our hands on a very small account, contract size, short selling counter trend trade into the synergy zone and capitalize of whatever the market gives us at that point. Now, the point of the whole matter is that we're going to use the zone as target prices on this small trade. But bear in mind, the market just could perhaps just go like so. So it's going to give us profits, small or whatever, and then eventually ramp up without getting into the zone. So don't get caught up on the idea that the zone will actually be reached. These are all high probability areas, meaning that the market just can consolidate a little bit here and there. And what you should do is aim yourself to gain about 20 or 30 pips perhaps out of the 50 to 60 that there is available. Only aim to gain 20 or 30, and that will probably help you out. So I'm going to pause the video and see what happens later on, and hopefully we're going to see more activity into this scenario. Now, in order for us to put an exit here, let me show you how I manage my trade here now that I'm here. Sorry. And so I just want to take the advantage that I'm we're watching it. So once again, we have an I identify what? A pivot high here. There's a couple pivot highs and there's a clear pivot high here. What can I do with this, guys? Well, what I'll do is certainly I connect this two, and look what I'm doing here. I got those two, and I also have this two. So what does that tells me? What type of help do I have in this by drawing those trend lines? Very simple, guys. Look, if the market decided to go up, look, this is where I went short. Let me just show this. This is exactly when I went short. The market gave me, well, quite a couple of pips right there. But also, notice this. The market just drove its way back. Why I did not close my trade in here? Well, it's very simple. I got my stop in here. It's not a big stop. It's only about 23 pips, as we saw. So it's okay. I'm not risking too much because I'm trying to do a double up here. You know, it's almost 2 to 1. And the other point of the matter is I had this main trend line over here. So I was expecting the market to probably go here and probably go here and bounce from it back again. And if you notice, this is exactly what it did. It went a little bit lower and then shoot down here. So leaving behind what? Another pivot point for myself. So I draw a second one in here, and in this one, now I have a lower resistance point for me to watch closely. If the prices start hovering and they take this one out, well, I'm gonna raise my eyebrow saying, look, they're probably gonna reverse or so. And I just want to cover my my original risk here. So I got now one resistance point in here, got it, which is this trend line, and I got a second one in here, guys. So this is the first one and second one. If I see the market just hovering between these two, this is what I'm expecting. I'm gonna leave it alone and see how they're gonna react. If they go in here and they react back into it, then I'm still okay. But if I see a pierce over it and they close above it on this 15-minute chart, then you know what? My original stop was here, but I'm gonna liquidate my position in here. I got no even though if they come back later on, I don't care. I'm just managing my money and my risk. It's taking too long. They're just hovering too crazy here for me, and they're breaking. They just stated two trend lines in here, over here, and they just stated these are two resistance points here that I need to take in consideration. And what I'm gonna do is I'm gonna get out of this, and I'm gonna lose perhaps let's see, instead of risking 23, I'll probably risk 15, around 15 or 16. All right, so I hope you got the point here, because every single pip counts. And since we're maximizing the situation, my point of view here is to maximize the trade by controlling the risk at all times. And that's the power of the pivot steps trendline system that I got for you guys. And this is a rough demonstration on how we use and how I use, because I haven't taught too many people yet about it, but this is how I use the pivot step lines. It's just simple steps that they're taking, and the market just leaves those steps behind, and those footprints, as I say, and I just mark them in there, and I use them. I just use them. I connect two of them very clearly, and I use those future trend lines as support and resistance. If they break into the upside, then that, it's a clear signal what they intended to do. So the original stop could be violated. Could be canceled instead of waiting to be violated. And we just close our trade over here. So instead of risking 23, we're probably gonna risk only about 16. Sorry. And I just saved about 6 pips in that of risk on that trade. But when you add up those 6 pips for about 60 or 40, 60, 80 trades, that's a little bit over 4,000 or full contracts at the end of the month or so. All right, so I'm gonna pause the video here and see exactly what happened, positive or negative, and I will enlighten you with it. Pause the video here, and I'll come back later on. Okay guys, I'm back. It's 1:44 a.m. Eastern Standard Time. If you notice, this trade into the synergy zone worked out pretty cool. This is a 15-minute chart. I usually go into the 1 hour chart, so not much movement. Much movement has gone through already, but looks good as it's going into towards the synergy zone as expected. All right, so far so good. It's doing pretty well. There's a couple of pips that we're taking here. Now, I just want to point out a couple of things of how to manage this trade. It's the same thing when the price get into the zone. You know, just imagine that the zone is over here on the top, all right, so to speak. So it took quite a while. So you notice I got the stop loss right again at let's see, right at there is 60.10. So what I'm gonna do is I'm gonna move my stop to break even point at 60.86, but quite frankly I don't feel comfortable with that one. So I'll probably move it to the most recent pivot high, which is 60.98. So let's do 60.98. So I'm gonna go right now. I'm gonna target stop loss, which is, you'll notice how this change is gonna go to, hold on, there you go. 1 second, there you go. It's going to be 60.98. And what I'm going to do is I'm going to move that in there. There you go. You see how high I immediately lower my stop loss. So I'm just going to give it enough space here to these guys to reach onto the synergy zone. So from where they are, we're still talking about 40 pips. So we're only about, let's see, we're only about roughly 15 pips of profit. Not bad if you're trading full contract. That's $150 right there. But forget about the profits. Let's just talk about the money management here. So from the 10 that I was able to lower my stop to 60.98. And that's a 12 pip right there. So I just saved, if I would have traded a real full contract, that's about $120 that I just saved right there immediately. So I'm gonna continue on towards the path of this target. So I'm gonna show you a couple of things right now. If you notice, I just want to make sure these guys are going to reach into the zone. That's all. That's all I'm interested. So let me point something out to you. Right now I'm seeing another small pivot. The reason that I see it's a pivot, even though it is a 50-minute chart, obviously this guy is a new bar and this one is lower. So this is a pivot. So what I'm gonna do is I'm gonna take that one, and so this is my new trend line, meaning that this guy over here on its way down is going to work out as a resistance point. All right, so if they break that resistance point, well, you're gonna having me get a second thought of the trade itself. So alright guys, I'm back. It's 2:07 Eastern Standard Time, and I just closed my position. I did not want to wait for my stop loss to be reached right there, and just took whatever there was available. So the point here is that right now, if you notice, the market is consolidating, as I stated for you. This is the reason sometimes this type of counter trend trades are not too comfortable, and you need to go very low in your contract size for them to work out. All right, so the market is just having a rough time here. So right now I'm back to my original plan, even though that I'm still holding the trade on my based forecast, which is I'm expecting the market to get into the zone if they decided to do it, but I'm gonna do it totally relax, stepping aside and just watching the price behavior. I don't have to be gluing to my computer until they decided to do it or not. It doesn't make any sense. But I just want to point out, which it was a great opportunity here to grab a couple of pips here, which it gave us a couple of pips. That not bad at all. But let's say that you just kind of broke even here because you were fill on the lower aspect of it. So if you notice right now, the market is just shooting up. All right. And they're just violating the support here, the resistance here, and I got the third resistance there. So I'm just gonna double check and confirm that with what this guy's over here. And what did they say? It's we got a 62% versus 30. It looks good. It looks like they're breaking up. So we are very confident of going long the market since it looks like they're going for it so far. So let's just go long the market on the breakout of the 1, 2, and 3 support, resistance, and resistance. And the dashboard just indicated a very nice turnaround point here from 66%, 28% going low. And that was a great opportunity right there. Alright, so now that I have this opportunity, I can do the same analysis I did first, since I still got my 3 target price into the future. I just want to figure it out which one of the 3 are more apt for me to target into. So what did I do? I measured the width of the target here, and I measured from that breakout that they just did a, let's say 53. It's right here. So that's my first mental target. It's 61.54. I'm gonna mark that 61.54 right there. So that's my main target right there, and it's pretty close to the 61.72 that I got in there. So it's roughly about 20 more pips away from it. So I believe that I'm safe to try to take that trade. And guess what? Look where the original stop loss was, 59.76. You think I'm gonna leave it there? No way. My stop loss is gonna be right here. So my risk from this trade should be, let's see, 41 pips alone. Not bad for the potential of, by taking the entry correctly, 41 to 47. Not bad. But this is this is the width of this, but the actual target is, the first target price should be this one, 64. So 41 for 64, and eventually if I take the next one, it's pretty far away, but you never know. 197 pips, so that's pretty okay. So I'm gonna do another calculation. Be right back. Okay, I'm back, and let's see, we just recalculated a couple of targets here, and these are the new recalculated targets. Confirmed, and that would be the 61.54 was double confirmed. That's a good one for a go. And the second one should be 62.14, meaning that I have a possible of 100 plus pip by waiting for the market to reach the 62.14. So it looks like that's our intention. That's okay. I believe I got a great entry right there, 41 and 108. So I got a great entry. very low target. I mean, very low risk. And right now, guys, just sit back, wait, and enjoy the ride. I'm gonna have my friend here take a look at this. Look what's going on right now with the British pound in this area. So we're talking about, sorry, let me do it again. There you go. We have a 79% on the pound versus a 36% on the USD, which states that these guys are moving quite nicely. Once I see this guy around, let's say, 85%, 85% and up, that gives me more confidence into this trade. But still, the strength is in favor of the British pound, and I'll just have to set these guys aside for a while and wait for the market just to move, make its move all the way through. Now, another point of view that I want you to have is this. Let me see if I can just squeeze this over here. Give me 1 second. It's something very, very nice for you to take in consideration, and that is the following. I'm bringing here the calendar, and look what's going on here. Can you notice something around this area? There is absolutely no British pound announcement except for the 7 p.m. Eastern Standard Time. Got it? This is Eastern Standard Time frame, meaning that we have no worries at all in the AM session, and usually should be about this area, 4:30 a.m. Eastern Standard Time. There is absolutely no British pound worries of reports coming out or anything like that, which translate into a very highly probable no turbulence flight up all the way up to 61.54 and 62.14. So in this case, just sit back, enjoy the ride, and if you want to have some chicken and lasagna while this happens, that would be great. Yeah, all jokes aside. Hey guys, that's basically what I wanted to show you, all my thinking through the process of this trade. So I'm going to pause it because I don't want to make it too long, and I'll come back with the outcome. All right. Okay guys, I'm back. It's 2:27 a.m. Eastern Standard Time. Look what is happening now. Let me go show you the beauty of the dashboard here. If you notice, I did not enter based on this dashboard. The dashboard is just a tool to let us know with a little bit more of peace of mind that what should we be doing on the trades that we usually take. Look, the 87-86% that I was talking about, when this happens, this guy's at 33. You would usually want to see these guys in the 20s, low 20s or 20s, around that area. But even this widespread of 80 something, above 80 something, that's a confirmation that we're usually looking to go along the market on a breakout system or so. Even though that we use a breakout system today, it was pretty cool based on the idea that we took the trade using the pivot step breakout system. It's not like buying above this high or low. That's the usual breakout system that they have. If you notice, I got a second buy here, so I added a second contract. Once the high was taken, I just went ahead and buy it based on the that criteria of the breakout. Now the first targets that I'm looking for is the 61.54 area, 49 and 51, and you notice that I got two closing together just because I use different type of methodology to confirm that those areas are the ones that I'm looking to target initially on this movement. My stop should be still at the 60-66 already, so the main one could be deleted, and that's no longer valid. and these guys are no longer valid, and this guy are no longer valid. So meaning what at all that well, the synergy zone is no longer valid based on the idea that they run out without pulling back. So that's good because they usually have to go fill the gap. They didn't do it, so they decided to go to the upside. We were looking to go short, to go long the market anyways. So that what did not work was the idea of shorting the market towards a synergy zone. This is a great example of how sometimes getting out of the original plan of the synergy zone in trading in the favor of the main train could put you into dangerous grounds. So I'm glad that this happened today because it's a very great opportunity for you to take a look at this type of trading, and I believe this is going to be one of the best training videos you're ever going to have on ForexFX inside. So as a matter of fact, this is going to be under a kind of a webinar videos because of the length of it, or inside another under training there. I'm going to subdivide the whole thing, so I'm going to put this on available as well on the criteria of live trading samples and webinar as well. Let's see. So right now I'm still holding this trade. I got nothing else to do. Oh yeah, hold on. If you notice, I kept the two trend lines that work as resistant. What do they do now? Exactly as you think. They are working now as possible support areas. So the reason that I left them is because I just want to take a quick look at this, and once the market reach the first target prices, I am going to liquidate one of these two contracts, and I'm gonna move my stop right from where it is to slightly break-even point here on the first the first one. So what I'm gonna do, let me just point this like that. Once the price reach this target price, got it, I'm gonna take the stop and I'm gonna move it to this trend line, which is it's actually I'm gonna put it right here on what I went long on the first contract, and I'm gonna leave the rest, try to see if they keep continuing to the upside. I just want to make and let the profits run, but I just want to select precisely where to move my stop so I can give enough space for the price to hover and not stop me out prematurely. Alright, so I'm just leaving these two as guidelines of where should I move my stop for the next level once the first target price is reached. Alright, I'm going to pause the video here. I'm going to get back later on here, see how it goes. Okay guys, we're back, and I just wanted to show you, notice the market just came back down. Let me switch this to 30 minutes so you can have a better view of what I was talking about. Check this out. I was telling you that these two guys here, the two resistance points turned into support, would it hold this price if they come back into it. Look what they did. They came back into it, and now they're just coming back up. Isn't that nice and neat? So this is a great system about the step pivot system, and as a matter of fact, I'm going to be creating this system by itself, and I'm probably going to use it for offer it as a low-key system, very rewarding system for people or average everyday traders, and just to give something of quality to be able to be sold on ClickBank or anything like that, because many people tell me if I can just offer something like that, you guys are getting it for free. But if you got any comments about the methodology of the pivot step system that I'm just showing you, just if you can just send a couple of emails about it, because as soon as I make the couple of videos, it's gonna be on a DVD by itself, as a matter of fact. And I just want to have you on their training. It's going to be link through it by itself. It would say the step, pivot, trend line system, whatever. And all I want you to do is start using it in other currencies if you're interested in it, and see how it works for you, and just let me know. But anyhow, by just knowing how to plot these trend lines, it will give you very immediate strong support and resistance points. Just want to point that out to you. And as the trade keeps going on, and that I see something that it's going to be beneficial for you to understand and see it live what it's happening, I just wanted to bring this over to you and show it to you. Alright, so I'm gonna pause the video here, and I'm just sitting back waiting for the first target to be reached. Hopefully they do. By looking at my British pound against USD correlation here, it looks still good in favor of the British pound. Let's just pause the video and I'll be back to you. Alright. Okay, we're back, and you notice I closed the trades. Let me just give you a quick insight, the reason why I did that. Just switch to the 2 hour. Okay, there's the hourly charts. We're doing like a double top in here. Kind of strange. This is a strange looking market behavior that I'm looking here. Guys, this is a great video today. Everything weird is happening today, and this is one of the best trading arena that you can find yourself into, so you can learn how to progress into this type of scenarios. Patience is your #1 friend in here. And number 2, I just want to point something out. This trade is completely objective. I have an objective of a target price in here. I noticed that my objectives was that if they break above these 2 resistance points, I will buy the market immediately, and I will use the most recent pivot low as the stop loss. Alright, this is everything is objective, not based on of how much money we're gonna risk or how much money we're gonna make. We don't know that, and you should not care about that. Alright, so let's just point that out to you right there. You should not care how much money you're going to be risking and how much money you're going to be able to make. You will find out that later on when your objectives falls into place. What I mean is, if we went long here, my expectation is to get into this position, and once I'm here, I'll clear out some one contract or get out or whatever it is, and then I'll find out how much money I made there. Alright, by doing that, you're gonna divide yourself into 2 aspects in here, and let me just point this out to you. You either gonna find out yourself about how to work out the pips, or you're gonna be over protecting your account about how much money you're risking. If your mind or thoughts are in this area, guys, you're not going to make any money at all. Alright? Because you're going to be too attached emotionally to the trades. Now, if you find yourself, and I explain this over and over again, if you find yourself too much attached to your trade emotionally because you're risking too much or whatever, the contract size is the wrong one. Alright? It's the wrong one. You're trading too big. That's it. That's what it is. Alright? So I just set that right there in there. The reason that you are too much into your trading account, you're too much attached to it, is because you're trading too high based on your expectation. When you find yourself trading the amount of contracts that makes you feel that if the market drops back against you 50 pips, 40, 60, 100 pips, and it doesn't affect your account or your emotions, or you can go to sleep with that too much of a remorse, then you're trading the right amount of contracts. Alright, so the objective here was to reach that point. Everything's still in place. If you take a look at the dashboards, 82 versus 40, that's good. But in my case, I'm going to be straight honest with you. I'm tired. Price is not moving up at all. And although many people will ask, why don't you just leave it in automatic? Why don't you just put your stop loss, to get out in there, and and move your target price in here. Well, you got a great point. I could have done it, but you know what? I made it the pips that I probably used to do on a regular basis in my personal level, so that was pretty much okay. So now I can go to sleep and do some things and pretty much easy, relax and not do anything. Besides, the real aspect of the trade would have been wait for tomorrow until they decide to move to one of those sides, and they looks like they're just starting out as of right now to move into this area, don't they? So it doesn't hurt me to take a profit. A profit is a profit. Greedy is not in my world right now, and I'm just talking about it a little bit more just to see they reach that target price, just so you can feel comfortable. Although it looks like they're finally going to reach it through the remaining of the day, because you know these guys are getting higher versus the USD. But I just want to point this out to you so I can close out the video here, and I can let you go and go back and restart the video. You want to go through it again, because this is one of the best video ever about money management and trade management. All right, so having said that, thank you so much. This is a long video. I hope you enjoyed it very much as well as I have enjoyed it creating it for you. And I'll see you on tomorrow's forecast, or perhaps in the next forecast. This is Carlos Diaz from Forex FX, and I'll see you on the next one.